The stock market, a place where companies and investors come together to buy and sell shares of ownership in businesses. But where did the stock market come from? And how has it evolved over time? In this video, we will tell you the story of this fascinating world that sees billions of dollars every single day. Let's go! The origins of the stock market can be traced back to medieval Italy, where merchants would gather at trade fairs to buy and sell shares of ownership in trade guilds. This early form of stock trading allowed merchants to share the risks and costs of running a business, and also enabled them to raise capital for expansion. These trade guilds were associations of merchants who controlled the production and sale of specific goods. They were responsible for setting prices, quality standards, and trade regulations. By buying shares in a trade guild, merchants could gain access to the benefits of being a member without having to invest their own capital in the guild's activities. This concept of shared ownership and risk-sharing was a revolutionary idea at the time, and it quickly spread to other parts of Europe. The rise of these trade guilds and the ability to buy and sell shares in them marked the beginning of the stock market as we know it today. It's important to note that the concept of buying shares in a trade guild was different than what we consider stock trading today, as it was more of a partnership than an investment. But it laid the foundation for the stock market as it evolved over time. As trade and commerce expanded, so did the concept of the stock market, and it became an essential tool for businesses to raise capital and for investors to grow their wealth. This early form of stock trading in medieval Italy was the starting point for the stock market as we know it today. It set the stage for the growth of the global economy and the development of modern stock exchanges. As trade and commerce expanded in Europe, the concept of the stock market also spread to other parts of the continent. This early form of stock trading was an important tool for businesses to raise capital and for investors to grow their wealth. One of the most significant developments in the early stock market was the establishment of the Dutch East India Company in 1602. This was one of the first publicly traded companies, and its shares were traded on the Amsterdam Stock Exchange. The Dutch East India Company was a powerful trading entity that controlled the trade of spices and other goods between Europe and Asia. By buying shares in the company, investors could share in the profits of the company's trading activities. The success of the Dutch East India Company and the Amsterdam Stock Exchange served as a model for other countries and companies to follow. The concept of publicly traded companies and stock exchanges soon spread to other parts of Europe and eventually to the colonies in the Americas. The Amsterdam Stock Exchange was also one of the first examples of a centralized market where stocks could be traded on a regular basis. This allowed for greater transparency and liquidity in the market, making it easier for investors to buy and sell shares. This development was a major step forward in the evolution of the stock market, and it laid the foundation for the modern stock market as we know it today. The Amsterdam Stock Exchange and the Dutch East India Company were important milestones. The stock market in the United States also has a rich history, and it played an important role in the development of the global economy. The New York Stock Exchange, which is the largest stock exchange in the world, was founded in 1792. It was created by a group of 24 stockbrokers who signed the Buttonwood Agreement, which set the rules for trading on the exchange. The New York Stock Exchange quickly grew in popularity, and it became the global center of finance and commerce. It provided a centralized location for buying and selling stocks, which increased transparency and liquidity in the market. This made it easier for companies to raise capital and for investors to grow their wealth. The New York Stock Exchange has played an important role in the growth of the United States economy. It's been at the center of many historical events. One of the most notable examples is the Wall Street crash of 1929, which marked the beginning of the Great Depression. It was a tragic event that had a profound impact on the global economy and the stock market. Despite this and other challenges, the New York Stock Exchange has continued to grow and evolve. Today, it's a global marketplace that connects investors with companies from around the world. It's also home to some of the world's largest and most successful companies, and it's a symbol of the strength and resilience of the American economy. The New York Stock Exchange is more than just a marketplace. It's a symbol of the American economy and the global center of finance and commerce. It's a testament to the power of the stock market and its ability to drive growth and prosperity. The stock market has undergone many changes over the centuries, and technology has played a major role in its evolution. One of the most significant technological advancements was the invention of the telegraph in the mid-19th century. The telegraph made it easier for people to talk to each other and trade, which made stock market transactions much faster and more accurate. The telegraph also allowed for the creation of new stock exchanges, such as the London Stock Exchange, which was founded in 1801. These exchanges became important places for business and finance around the world, bringing in investors and companies from all over. Another major technological advancement was the advent of the Internet in the late 20th century. This revolutionized the way the stock market operates by making it possible for anyone with an Internet connection to trade stocks online. This greatly increased the accessibility of the stock market and made it possible for more people to invest in stocks. Today, the stock market is fully digitized, and electronic trading systems have replaced paper stock certificates. The use of algorithms and high-speed trading has also become increasingly popular, which allows for faster and more efficient trading. The stock market is now a global marketplace that connects investors and companies from all over the world. It continues to change and adapt to new technologies and changing economic conditions. The stock market has come a long way since its earliest days in medieval Italy, and its evolution has been shaped by technological advancements. From the use of paper stock certificates to electronic trading systems, the stock market has adapted and grown to become the global marketplace we know today. It has played a vital role in the growth and development of the global economy, and it continues to be a key driver of innovation, investment, and prosperity. As technology continues to evolve, the stock market will no doubt continue to change and adapt, offering new opportunities for investors and companies alike. The future of the stock market is exciting and full of possibilities, and it will continue to play a vital role in shaping the global economy for years to come. And as the world continues to change, the stock market will continue to evolve, providing new opportunities for companies to raise capital and for investors to grow their wealth. One of the most recent trends in the stock market is the emergence of socially responsible investing. This is where investors consider the environmental, social, and governance factors of a company before investing in it. This trend is becoming increasingly popular as more people become aware of the impact that companies have on society and the environment. Another trend that is becoming increasingly popular is the use of artificial intelligence and machine learning in stock market trading. These technologies are being used to analyze vast amounts of data and make predictions about stock prices and market trends. This is allowing traders to make faster and more accurate decisions, which is helping to improve the efficiency of the stock market. The emergence of cryptocurrencies and blockchain technology is another trend that is having a significant impact on the stock market. Cryptocurrencies such as Bitcoin and Ethereum are becoming increasingly popular as an alternative form of investment. Blockchain technology is also being used to create new forms of stock trading, such as security token offerings, which allow companies to raise capital by issuing digital tokens that are backed by assets such as shares or real estate. The stock market is constantly evolving and adapting to new technologies and changing economic conditions. As the world continues to change, the stock market will continue to evolve, providing new opportunities for companies to raise capital and for investors to grow their wealth. It is an exciting time to be a part of the stock market, and the future looks bright as technology continues to shape the way we invest and trade. Thank you for watching, and remember to subscribe for more videos.